Today was another fantastic day in the markets. Overall, a lot of green. Gold took a hit, of course, but I'm not worried. I'm just going to hold those shares of GLD and SLV and PSLV for a long time. And I'm holding shares of Root as well, ROOT. They're a car insurance company. I just bought some because Obi-Wan was. If you don't follow Obi-Wan on YouTube, you should. I think you can see who I subscribe to, so find them on that list. At any rate, the reverse stock split really messed everything up. TD Ameritrade users like myself, we had to pay a $38 fee after the split, which was dumb. I did not appreciate that, but it's okay because it appears to be going up and soaring higher. So I'm going to be holding on to ROOT. I'm a little worried with how the US is handling its relationship with China relative to Taiwan. We're sending more people over there and China's doing more drills, and that's just alarming to me, and I don't like that at all. We have economic data coming out later this week, and I think AMC is still working on that double top. I'm going to keep saying it, double top, and I'm not worried at all. I actually did have to sell the puts I've been rolling, but that was to pay the fee for the Root shares after the reverse split, which was stupid, because those puts were just about to start making money. I mean, they were just break even when I sold them, which is okay, but annoying still. So let's go ahead and look at some charts. Starting with SPY, I think that the markets continued their rally after gapping down, and that initially might seem good, but I think we could be approaching the top of this rally. I'm following this broadening pattern. It's showing these yellow lines here. We have a touch here, 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 and a couple of touches up here. So I'm thinking 1, 2, 3. We might need one more touch. Maybe we can use a start there and say we have our 5 touch points for a broadening ascending wedge. And I don't think we saw a bullish breakout today. The RSI is over that 70 level. That could indicate that the rally is coming to an end. It just depends. I think that we're having a decrease in volume, which is typically bad. That's not what you want to see at the end of a rally. You want to see increasing volume to show strength, but that is not what that is. Not at all. So I'm a little concerned about that. The implied volatility is really flat as well. So SPY might be getting ready to make a nice little healthy retrace, and it wouldn't be that big of a spill either, just down to about that $400 level. It would be okay, not a big deal. Just looking for some healthy retracement in the markets. And with that, let's just move on to AMC. On the daily time frame, the candle today is a little weird. Is that a doji? That's not really a doji. Not really a doji. I think the takeaway here is that you have a much lower high and a much lower low, and there's just no disputing that, right? So is it bullish? Is it a reversal candle? And that is, I don't know. The last time we saw this kind of a candle, we saw some upside and then this massive rejection, right? And so that's why I look at these waveform analysis more than these candlestick patterns, because those candlestick patterns can be easily affected just by when the waves are showing up. If you're at the top of a corrective bounce at the end of the day, you get a green candle like this, but watch out because the price could actually be ready to retrace. I'm gonna go ahead and just erase some of this off of there. Yeah, I'm still not bullish on AMC. No, still not. In fact, I think that my double top is coming in pretty nicely. Let's just go over to the next chart. This is the 1 minute. This was today, and this is why I'm talking about daily candles can be deceiving, is because today was just a corrective move. After we finished a wave 3, I think this is wave 3 down here, and not my Elliott wave count. It's a minuet wave 3. We now find ourselves finishing minuet wave 4, which is a corrective bounce higher in a motive wave heading down. Motive waves tend to occur within channels, and so I have this motive wave shown with that downward channel, and you can see that the medial line here showed the support within today's corrective bounce. And that corrective bounce, of course, was a clean 1, 2, and 3 move. And we saw a motive wave in that first leg, and I think in the second leg we can find one too if we try hard enough. 1, 2, 3, 4. Maybe tomorrow morning be a little higher, and then wave 5 starts and begin to spill downward. Still looking bearish to me, honestly. Zooming out a little bit into the 15-minute time frame. This is where I'm keeping track of my double top. I think it's coming in better than people would like to admit. So top 1, of course, is back here. Top 2 is right here. And you can see my Elliott wave count here. The first motive wave, 1, 2, 3, 4, 5. That this leg down occurred in that 5-wave structure. That implies a zigzag is going to occur. And the zigzag is exactly what it sounds. It's just a 3-wave move down. And there's 2 motive waves in there. It's the first one and the second one. And so I'm thinking that this first move down, we can probably take the height of this move and apply it to the top of this top, the second top, and say that's going to be our move down, and that's going to confirm a double top once we get a low below the bottom of that first motive wave. So what am I thinking? We had a big 1, 2, 3 push higher. That's a corrective bounce, all right, and that would be this portion of that zigzag. And now we're working on this third leg that will also feature a motive wave, and I think we've started it. So I'm just gonna clean that up a little bit. I'll put my little zigzag down here again. We have 1, 2, 3, and then today we finished 4, which is a 3-wave bounce, right? So it's like 1, 2, 3. That's this guy right here, and we're looking for 5 now, heading lower. And I think we're gonna come in and we're gonna test this internal trend line. It's not the external trend line, but the internal trend line. This to me looks like a rejection of the bulls, not the bears. To me, this looks like the bears are still having a good time if this wave 4 were able to make a higher high than the low we saw at that first motive wave. That would have been a big deal. But the 4th wave failed to rise even to there. It's possible tomorrow morning we come up, and then that's the level to watch. If the bulls can push the price above that level, then I'm going to say, hey, maybe we have something substantial. Let me zoom in a little bit. It'll be easier to see. So again, you have the bottom of wave 1 right here, and wave 4 may come up and test this level before heading lower into wave 5. So whatever level this is, that's what you want to watch. It's very possible that on the intraday chart we'll see a spike up here. You never know. If you get a big wick, right, and a big red candle at that level, watch out. The price is going to dive. So I'm still bearish. Still holding on to a lot of the shares that I bought of Root. There was that reverse split, so my 100 shares became like 5 shares, and that was dumb. GLD took a hit today, and that's okay. I'm just holding those for a long time, for a longer period. And what else was there? Genprex today did pretty good too, but I'm not holding those anymore, unfortunately. So with that, I'm just going to sign off, say happy trading.